Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, March 24th, 2010. This morning, we're talking about the Euro mess. Now, it's been no surprise that the majority of the risk in the market has been coming from the Greek situation over in the Eurozone. But today, it seems to have taken a turn for the worse. This morning, earlier, Fitch Ratings Agency came out with a downgrade on Portugal's debt, claiming that the sluggish economy there is going to force them to have problems with their deficits and repaying their debt load. Okay. Now this also comes about at a time when they're trying to figure out a plan for Greece, which has Germany's been holding up that progress for a while, and I'll explain why in a minute. But it looks like they actually may have come to some sort of agreement. It looks like Sarkozy in France has sort of caved into Germany a little bit and said, okay, you know what, we can use the IMF as a backstop for Greece if a bailout is needed. Now at this point, it's still not even a 100% certainty that they're going to need a bailout as they're going to default. Okay, and a lot of this had to do with the interest rate they were going to pay. But now France is sort of caving into Germany, saying, okay, we're going to go to the IMF route. And there's a reason why this may be occurring. One of the mandates of the euro is that at the way it's currently set up is that you can't be kicked out of the eurozone. So in other words, if you're one of these pigs countries out there like Portugal, like Greece, they can't throw you out. But what can happen is the company can elect to leave. So while everyone was afraid that it was Greece might leave or Portugal might leave, no. The problem is Germany might leave. All right, now if Germany leaves, you basically got a bunch of countries like the pigs that are sitting around that have all these deficit problems. And the one strong country in the zone takes off, sort of like taking all their toys and going home. So I think that's probably one of the reasons why France caved into this. But we'll see what's happening here. Just take a look at the chart. Euro's now at 133.4. So it's broken out. We're looking at a 4-hour chart here. This is euro dollar. And as you can see, we'll just take a quick peek on the daily chart. Let me look at it. 3 months is a better look. You can see it's starting to break lower. I've got stochastics up on the chart, which still haven't gotten to a low zone yet. So we could be looking at 132, possible 130 situation. Now, a low euro actually helps benefit Germany. As I mentioned last week, Germany is one of the largest exporters of manufactured goods. So when the euro is low, that makes their goods more desirable. So there's a little bit of, I'm not sure exactly what's going on here, but what this is doing is bringing up the question of whether the euro is structurally sound enough to survive. So a lot of risk coming out of the eurozone. So we're going to see what happens with this. So stay tuned to this. Some of the other things, as you would expect, we're in a risk aversion type morning. We've got Aussie dollar down. Here it is right here, down 0.9% versus USD. Flight to safety trade, basically. But I got to tell you, I like the Aussie. The interest rate's good, and we're starting to see some of these risk themes break down a little bit. All right, some of these economies are starting now to become stable, and quite frankly, I don't see how people can say that Australia is a quote risky country. I mean, I'd have my money there regardless of what's going on in the economic climate. The only problem is, of course, is that if everybody else decides they want to sell it, you could take a hit there. So I usually use these risk aversion days as buying opportunities for something like the Aussie. Another thing that's doing well today is the loonie. Loonie's up. Mark Carney, Bank of Canada governor, he's going to give a speech today, and people are saying that this is going to prepare everybody for the ensuing rate hikes that are going to start coming. He said he wasn't going to hike rates till June, but he may be moving sooner. So the dollar's higher as well. I just want to take a quick look at USD JPY. I came in this morning and I thought, oh my God, the euro is going to be the worst performer. Turns out the worst performer today is the Japanese yen. I mean, look at this move right here. That's huge. It's actually down 1.7% versus USD. I just want to look at it on the 5-minute chart here. You can just see from the past day, just boom, nice move up. And actually, the euro is higher against the yen. So you're thinking to yourself, well, what's going on with the yen? Well, they just reported that their exports, have grown at the fastest pace in the last 30 years. Okay, so this shows that economic recovery might be taking place. So, you might be thinking to yourself, well, why is the yen down with this? I mean, that sounds like it's pretty good. good news for the country, doesn't it? Well, yes, it is good news for the country, but this move is a little bit counterintuitive, and here's why. Right now, Japan still has a serious deflation problem, and the Bank of Japan has been committed to trying to combat that. Now, the government's asked them to do some quantitative easing, some more bond purchases in order to try and stimulate the economy, but the problem is that adds to their deficit. Well, now that you see that exports are gaining, this shows signs that global recovery might be underway. So if the Japanese economy is doing better and they can still maintain these low interest rates, okay, that's going to be negative for the yen, because now people are going to sell it and they're going to say, all right, that's a stable region. Now let's go look for carry trades and try and seek yield elsewhere. So that's sort of why the yen's down. It's counterintuitive, so sometimes you got to pay attention to those. So, right now, the major fear on the market obviously is coming from Eurozone, and we got to see what happens with Germany, with the pigs. If there's any sort of wrangling that the euro may self-destruct, which a lot of people like to say that, but I can tell you right now, I wouldn't want to be owning the euro at this point in time, and it looks like I'm be more apt to put my money in some of these other, quote, riskier assets that have decent economic recovery going on. So that's the beauty of the Forex market, because when something is moving so bad, money has to go somewhere. So we could see a lot of these currencies benefit just because the euro is selling off. So that's what we have for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.